Hey everyone, today we're going to look at what some of the top investors did in Q2 2025. If you are curious about how the big names move their money, this is for you. Before we start, I want to tell you where I am getting this information. I am using Dataroma, a website that tracks the portfolios of the biggest investors in the world. You can see which stocks they buy, which they sell, and how much of their portfolio each stock is. During this video, I'll be showing screenshots from Dataroma for each investor while I talk about their trades. Let's start with Warren Buffett. You know him, the Oracle of Omaha. In Q2, he bought over 5 million shares of UnitedHealth, which added 0.6% to his portfolio. Quick side note, I already made a video about Buffett's big purchase of UnitedHealth, so if you haven't seen it, check it out. Buffett likes companies that grow steadily over time and have strong businesses, and UnitedHealth fits that perfectly. Healthcare keeps growing no matter what. At the same time, he sold 20 million Apple shares and reduced Bank of America by 26 million shares. Even Buffett sells sometimes to balance his portfolio and make room for new opportunities. Next is Michael Burry, famous from The Big Short. He bought 50,000 shares of Lululemon, which is 21% of his portfolio. A big bet. Barry looks for companies that are undervalued but have strong growth potential, and Lululemon is doing really well selling comfortable and stylish sports clothes. He also reduced Estee Lauder by 25%, probably because he thinks it's too expensive right now or to free up money for other opportunities. Now Bill Ackman from Pershing Square. He bought 5.8 million shares of Amazon, adding over 9% to his portfolio, and added almost 21% more of Alphabet, about 925,000 shares. Ackman likes to focus on a few companies he trusts and invest big when he believes in their long-term potential. On the sell side, he sold all of Canadian Pacific Kansas City, maybe because he felt it reached its peak value or wanted to focus on tech and growth companies. Moving on to Terry Smith, founder of FundSmith, he added Intuit, doubling his position to about 187,000 shares, showing he believes in its software for small and medium businesses. But he also sold Brown-Forman completely and reduced Philip Morris, Meta, and Microsoft a little. Terry's strategy is about holding strong companies for the long term, but he adjusts when prices are too high or when he sees better opportunities. Finally, Dev Kantesaria. He bought Equifax, 144,000 shares, and MSCI, 59,700 shares, while reducing Intuit by 11%. Kantesaria focus on high-quality, stable companies. The small reduction in Intuit is likely just to balance the portfolio, not a big change in strategy. Looking at all of them together, you can see a clear pattern. They all balance buying and selling, invest based on what they believe in, and focus on companies they trust for the long term. Even super investors rebalance to manage risk and make room for new opportunities. Why does this matter to us? Watching these moves can show market trends. When big investors buy tech or healthcare, they see long-term growth there. Seeing the numbers on screen also helps understand how big these trades really are. The key lesson here, super investors think carefully, buy what they believe in and sell when needed. Tracking their moves on Dataroma doesn't mean copying them, but it helps you understand the market and spot opportunities. So what do you think? Which of these trades surprised you the most? Let me know in the comments. That's all for today's video. Thanks for watching.